Alrighty, guys. So let's talk about what the heck happened, why Meta stock crashed. Let me break this down for you, okay? So first up here, very important to understand the numbers were about as great could be. The revenue was up 27% year over year. The income from operations was up 91% year over year. The operating margin increased to 38% versus 25% in the same quarter last year. Insane. Net income was up 117% for the company on a year-over-year basis, and diluted EPS was up 114% year-over-year for the company. Let me be very, 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 very clear. The numbers were extraordinary. Mark Zuckerberg right here, he says it's been a good start to the year. The new version of Meta AI in Llama 3 is another step toward building the world's leading AI. We are seeing healthy growth across our apps, and we continue making steady progress building the metaverse as well. Now, we look a little deeper here. This is all great. Family daily active people, so this is somebody using at least one of Meta's apps each day. 3.24 billion, that increased 7% year over year. I still don't know how they grow that number. I'm like, geez, they're not going to be satisfied till literally every single human on the planet uses at least one of their apps. It's insane. Ad impressions were up 20% year over year. Ad price per ad was up 6% year over year. Revenue, once again, was up 27% year over year. They kept costs and expenses in check in a massive way, only up 6% year over year. CapEx was kind of what you expect of CapEx to be for this past quarter. They also repurchased over $14 billion worth of stock, and then they paid their first dividend only, which I definitely enjoyed. Cash and cash equivalents, marketable securities, $58 billion. Free cash flow was over $12.5 billion. And headcount actually dropped for the company 10% year over year. So up until this point, we're still wondering, why is Meta stock down? Because these numbers look flipping flapjacking incredible. Here's where things went bad, if we can really call it that. So this is what Wall Street didn't like. The guidance. They did not put a guide out there that was above Wall Street consensus. The midpoint of the guide was about $500 million, roughly, lower than where Wall Street was at. So Wall Street does not like that, okay? Additionally, Zuckerberg says we expect, or it's actually the CFO talking here, it says we expect full year 2024 total expenses to be in the range of $96 to $99 billion, updated from our prior outlook of $94 to $99 billion. So now they're going to the upper range, right, of what they expect total expenses to be for this year, due to higher infrastructure and legal costs. For Reality Labs, we continue to expect operating losses to increase meaningfully year over year due to our ongoing product development efforts and our investments in the further scale of the ecosystem. They don't like that either. Wall Street doesn't like Reality Labs at all. They wish that business just went by. Like literally, if Zuckerberg said we're getting out of Reality Labs and stopping the metaverse, I think the stock would be up 25 to 35% the next day. I kid you not. That's how bad Wall Street really hates that division. And it does burn a massive amount of money. We do hope to see the payoff over this next, decade, 2 decades. But for now, they don't like it. We anticipate our full year 2024 CapEx, capital expenditures, will be in the range of 35 to 40 billion, increased from our prior range of $30 to $37 billion as we continue to accelerate our infrastructure investments to support our artificial intelligence roadmap. While we are not providing guidance for years beyond 2024, we expect capital expenditures will continue to increase next year as we invest aggressively to support our ambitious AI research and product development efforts. So, this is where things went south, right? You first off, the guide being just slightly below where analysts are at. I think the stock could have got past that. I don't think that's why the stock's down big. That's just like, just kind of a little bit of cold water on the next quarter. The real reason the stock's down is all about expenses. And Wall Street really loved it when Zuckerberg was focused on efficiency and when he, to what Wall Street standards were, really keeping CapEx in line. But now Wall Street's really worried about Zuckerberg's going to go crazy with spend again. And so therefore, they are not very happy with what they're seeing here when we're talking about CapEx expenses above or at higher ranges than where they were at, right? Now, to be very crystal clear about this, the income statement's an A+. I mean, it's as good as it gets. That's literally as good as it gets for an income statement right now. Absolutely phenomenal, right? Now, back to this whole Meta Tesla situation, right? Tesla net income down 50% plus year over year. Stock goes booming. Meta net income up over 100% year over year. Stock down massively, right? Tesla revenues negative. Meta revenues insanely positive at 27%. And yet the stock's move in opposite directions. It's a very frustrating thing for people. I understand. It's the game of Wall Street. The game of Wall Street, and I talk about these things and I mention these terms all the time in videos just casually because I've been doing this for so long, but this game of Wall Street, priced in, set up, beat expectations, missed expectations, weak guidance, strong guidance. All these words on this whole game of Wall Street, it doesn't really matter for long-term investors, but for traders, they play this game. It's a game of back and forth of like, oh, did the company miss their expectations? Oh, that stock had fallen so much into earnings. So even though the bad news came out, it wasn't so bad that the stock actually went up, right? That could be like a Tesla situation. Or stock ran so much into the earnings that even if they reported great numbers, the stock couldn't go up. It's all this back and forth, the game of Wall Street. As an investor in the market, you just got to understand the game of Wall Street does not mean your stock did bad or good. The income statement is whether your stock did bad or good, okay? Not the stock price reaction from the game of Wall Street. The bottom line is, if we were judging off of income statements, actual financial statements that actually matter, Meta stock would be up 15-20% after hours. They just reported as good of an income statement as you can possibly report, with as good of a balance sheet as you can possibly report, right? With also very strong guidance. Was it the midpoint was slightly off versus what analysts were at? Sure, but the growth is still there. I mean, even if you take those numbers, you're talking about maybe 16 to 19% revenue growth year over year. That's phenomenal. And you would say the bottom line is going to grow at a much faster clip than 16 to 19%. So it's just a little food for thought in regards to that, okay? Next up here, let's talk about if Meta stock is a buy in the morning, okay? Let's call it an easy money buy in the morning. So here's the deal with Meta, right? You have an A+ business model. We're talking about when you own Facebook, Instagram, WhatsApp, Facebook Messenger, and you have the VR as kind of cake on top. You own Llama 3, right? Probably the open source model of AI in the future. You've got your own AI products that you're testing. And Zuckerberg said on the call, he believes Meta is leading AI against every company. Against every company, he said, okay? And he's not really the type to just make statements to make statements. I can tell you that as somebody that's watched him and listened to him over the past 15 plus years. He's not one of those guys. So for him to say that, he's really got to feel 100% confident that Meta absolutely is the leader in AI, right? So you get all these incredible business models that almost everybody would want thetheir hands on. You've got an A+ income statement with this company, an A+ balance sheet with this company, right? You've got an A+ long-term opportunity. Facebook continues to just be a great cash cow. Instagram continues to grow and be another tremendous cash cow. And Instagram still has a lot more monetization ahead, by the way. People forget, it was only a few years ago, monetization really started to come into Instagram in a major way. WhatsApp is still at the infant stages of monetization. So WhatsApp's like a 10 plus year monetization opportunity ahead, right? And then metaverse is out there, AI opportunities out there. Those are kind of more longer term matters for the business, right? So the long-term opportunity is incredible at this company. You've got an A+ CEO. If you look at the Mag 7, how many of those companies are really founder-led at this point in time? Apple's not, right? Microsoft's not. And respect to Tim Cook, respect to Satya Nadella, those guys are awesome. But I'm just saying, these aren't the founders, right? So you don't have it at Apple, you don't have it at Microsoft, you don't have it at Amazon, right? Andy Jassy, phenomenal, but he's not Jeff Bezos. You do have it at NVIDIA, right, with Jensen there. You do have it at Tesla, even though Elon Musk wasn't technically the founder of the company. He's basically the one that's architected this whole thing together, right? So you could count Tesla as have done that. Google doesn't. Meta does, right? So where do you want to put your chips on the table, right? I mean, I feel pretty darn good about being in a position to put my chips on the table with companies like the Teslas, the Metas, the Nvidias, these sorts of companies that have the leadership there that has gotten them to this place. That is absolutely amazing, right? In respect to Andy Jassy, I'm obviously a big Amazon shareholder. He's really the architect who really built AWS into what it is today, right? Which is just a huge component. So in Meta, back to Meta, we got an A+ CEO here. So the next question is valuation. Is valuation make sense tomorrow to be a buyer of this stock, right? Well, when we look at Meta overall here, forward P on the stock, looking at 1000xstocks.com, wait list now is like, I think 270. I think there's 270 people on the wait list. So if you want to join the wait list, get on that tonight. 1000xstocks.com. We have monthly memberships and yearly memberships for that. Looks, I think we let 4 people in yesterday. For Meta, 20, we can call it about a 24 forward PE roughly. Many stocks trade at 18 to 26. So we're kind of in that middle-ish range of where you'd want to be at there. So that doesn't necessarily tell you you're undervalued, right? It kind of tells you you're kind of in where you should be, but you got to factor in growth, right? Growth is very important. If we look at current year expected revenue growth, well, we're talking about 24% roughly. That's about 4x where the average stock usually reports their revenue growth, right? Next year, about 14% revenue growth expected for Meta, right? Which we can call 2 to 3x where average stocks are expected to grow. So we got a company trading roughly in line with a pretty regular market valuation, but the growth rates of this company are nothing regular. They're way above normal, massively above normal. It's not even remotely close, right? I mean, there's going to be a lot of companies this earnings season that will not grow their business, or if they do, it's a few percent, and then Meta just grew at 27% clip. So when you look at it from that context, Meta looks extremely undervalued here. We're not even talking about the long-term 5, 10, 15-year opportunity. We're just talking on the short term. In the very short term, like the next year, Meta looks insanely undervalued. So the next thing you want to do is you want to compare these stocks versus their peers, right? And so that's why I have the compare feature on 1000X, because I want to compare these stocks versus each other and kind of see where they're trading at, right? So I'm going to compare Meta versus who? Google and Amazon. You know why? Well, Google is another advertising giant and Amazon's a third advertising giant. Meta, Google, and Amazon are the advertising market. They are the 3 big dogs, right? And if we take a peek here, right, and keep in mind if Meta's down huge tomorrow, the forward P is going to be lower than Google and Amazon. We don't have it where after hours is reflected. It will reflect tomorrow, right, on the open. So we have a situation here where Meta's likely trading at a forward P lower right now, if you factor in after hours trading, than Google and Amazon. Yet, Meta's going to way outgrow revenue growth, either of those companies, and probably profit growth as well, net income growth as well. And, you know, I like Google, good company. I like Amazon, I'm a big shareholder. But at the end of the day, the steal deal is Meta, if you're going to compare these 3 companies versus each other, right? And so, looks pretty darn undervalued to me, right? Next thing to keep in mind is every dip is a buy when it comes to Meta stock. It's always been like that since this company went public. It continues to be like that to this day. Every dip's a buy in this one. If you've ever bought dips on Meta stock, you've likely been very, very happy you've done that, right? And I think this dip will be no different. I think it'll be short-term in nature, right? One thing I do worry about in regards to Meta is the next time we have an actual real recession, because in that situation, obviously, spend pulls back, those sorts of things. And that could hurt Meta's business model because they are so massive nowadays, right? But the fear of that is a fear of every company. Like, there's pretty much no stock you wouldn't be fearful of if you had a legit recession, right? So that's just a little food for thought in regards to that. But every dip's always a buy with this stock. It's always been like that. I still remember when this company went public and the stock fell 50% in its first few months. The thing about Meta is Wall Street owns it because they have to own it. Because the company is so big and dominant, they have no choice. But let me let you guys in on a little intel, a little secret, okay? Wall Street really doesn't understand Meta. They never have. From the day this company went public, before they went public, they never understood it. When the company went public, you know what I heard when I would turn on CNBC and watch these Wall Streeters talk about it? How are they going to make money? What makes them not the next MySpace? They had these very, very, very simple questions that they didn't even have a clue to about how do they make money? Well, why would somebody pay to do this or do that? Or and looking back now, it's just very naive, right? We're like, are you serious? But I'm dead serious. When that was the talk back in the day, you turn on Bloomberg, CNBC, you'd watch the Wall Streeters try to talk about this, and folks in general, they didn't understand, how are they going to make money? How are they not going to be MySpace? Because MySpace was big and then they went under. And so that became the big thing, right? You never understood it. And to this day, they still don't understand it. And that's why the stock went down 50% after the IPO. They didn't get it. They were how does this work? And they still don't get it to this day. When Zuckerberg's out there talking about what they're up to in AI, when he's talking about Llama 3, they don't understand what's going on. Wall Street's not built like that. This isn't what they do. Wall Street collects a bunch of fees off very wealthy people. And so their game is totally different. Do you think their business model is baked upon understanding highly advanced AI models? No, of course not. And they really don't need to. They play the game of Wall Street, which is kind of let's try to keep up with the market. If we underperform it a little bit, okay. If we overperform it a little bit, okay. Let's just make sure our billionaire clients and our $100 million clients and our institutional clients just stay with us, right? That's the name of that game for them. And then they play the little game back and forth of Wall Street of did the company beat expectations? Did they miss? Was the guide there? Was everything priced in going in? So you just got to understand that, man. It's a different game they're playing than what we play. The average Joes out here, whether you've got millions of dollars in your portfolio or whether you got hundreds of dollars or thousands of dollars, they're playing a different game, okay? We're investing our own money. Our own money's on the line. All these Wall Streeters, the far majority of money they invest is not their own money. It's other people's money. So people like me and you, we're playing a different game, okay? You just got to understand that. And you got to let them do them. And do whatever, I don't want to say clownery, but do their little show. That's whatever they do, okay? What we do is just a different thing. When you're talking about building out an investment account, that's with your own money. You think differently. You act differently, right? And the thing you don't want to get caught into is playing their game because guess what? You're not getting the fees. You're not getting the 20% on the profits. You're not getting the 2% back end fee. You're not getting any of that, okay? So you don't want to play their game because that's a lost cause. Let's talk Meta.
Today, joining us right now.
Remind me not to watch 4 bearish Tesla videos back to back to back. I can deal with 1 or 2. 4, that was brutal.
It was Barton Crockett, Rosenblatt Securities senior analyst. Barton, Meta has been on a tear, not just the stock, but when you're looking at the growth in the company's earnings too. Is that something you think is sustainable?
Well, certainly. They're in such a tremendous place right now. I think in the first quarter, they'll be growing advertising 27% is what we're modeling. They grew it.
God damn it. The thing is, okay, Tesla's got to continue to innovate as time goes on, right? They're a tech company. We've always said it as tech company, right? Automakers, they operate on a whole different thought process. It's not about innovation. It's about just trying to make vehicles and make a little money here, right? Low margin. Tesla's about innovation. It's about continuing. They think like a tech company thinks, right? They think like Apple did back in the day, right? Let's come out with the next product, the next service, trying to stay ahead of everybody, right? Let's have the newest features that no one else has. It's going to blow everybody's mind. That's what Tesla does. And so that's the type of team they have there. That's the type of DNA they have in that company, right? They don't just sit around and be like, this is what we have and this is good enough. If you look at where Tesla was 10 years ago versus where Tesla is today, oh my gosh, they've improved so much in those vehicles versus where they were at 10 years ago, right? Even versus where they were at 5 years ago. Now think 10 years out to the future. Where do you think Tesla vehicles are going to be, right? And so, these are just all things to kind of factor in there. They just, it's just different DNA in that company.
Like 24% in the fourth quarter. I think that'll be the fastest growth of any of the major kind of internet ad complexes. In the first quarter, they'll be growing advertising 27% is what we're modeling. They grew it like 24% in the fourth quarter. I think that'll be the fastest growth of any of the major kind of internet ad complexes. I think Amazon will be growing 25%. I think Google consolidated will be growing, close to 8%. And so they're really, big and growing massively. The comparisons get tougher for them as you move over the balance of the year. They are growing their spending this year, so it is going to be a real kind of test, a gut check to see, do these guys really have the ability to compound big growth on top of big growth with big numbers? And our bias is skewing favorably. They've been making great investments in AI-driven kind of marketing tools. If anything, this noise around TikTok helps them. So I think they're very well positioned even after the great performance that they've put up.
Why do you think they are going to see the most growth in the ad market versus all the big tech competitors? Is it because of those AI tools?
I think that is a big part of it. I mean, they've been investing at scale. They've got a direct marketing focus in machine learning, AI. That's something where they seem to have built a better mousetrap, and the incremental ad dollars are moving their way. They're growing much faster than their social media peers, and I think that really speaks to the product. And this is a direct marketing driven marketplace for them that is results driven. And so they're getting the money because their marketers are getting the results.
Barton, can I have you weigh in on a broader conversation we've been having through the morning? We've been talking about productivity, the growth that we've seen in the last 3 quarters, whether it's sustainable, whether it's real, whether it's being caused by government spending, whether there's something to do with AI. I know a lot of places haven't seen huge uses for AI, but Jamie Dimon from JP Morgan talked about how they are using it actively in 400 different use cases, everything from fraud to marketing to idea generating. Moderna has a big story in the Wall Street Journal today that it's doing a deal with OpenAI, and it's hoping to, by the end of this week, have the ChatGPT available to all of its employees. And how they really see that for building things for drug development. Now you're talking about how Meta is potentially outstripping and outgaining its competitors in the advertising space because it's using AI tools too. Do you think AI tools are being used broadly enough to actually increase productivity at this point?
Look, I mean, I can't say that I've calculated numbers on that, so everything I've got is anecdotal. It certainly feels like there's a potential there. It doesn't feel in the companies that I look at that it's been realized broadly outside of what we're seeing with Meta. But certainly Amazon's making a lot of noise. The cloud service providers are leaning into this. And there's tons of innovation and tons of experimentation. I think that this is, moving beyond kind of a chatbot that would amuse you and help you do your homework to something that's getting stitched into, everyday kind of business activity. And there's people who are doing it well and people who are doing it less well. But on balance, I wouldn't be surprised if we look back in a couple of years and this has meaningfully helped the macro backdrop.
Alrighty, folks, I got to get ready to hop on. Obviously, I'm expecting really good earnings from Meta here, so I'm very excited about the earnings. Pin and comment down there if you want to join me for that Twitch live stream. It's going to be a beast. Much love and have a great day.